There is a need for a comprehensive job loss insurance cover in India to protect the workforce from widespread income losses and unemployment in the economy. The job loss insurance is a short-term 12 to 24 months income support cover. It is like a helping hand from a government or an insurance company when one is searching for another stable job in the market. The monthly amount paid is calculated based on the time spent on the job and the average salary drawn over the years. In India, there is no specific policy covering the job loss. The current policies comes as an add-on cover with a health insurance policy or a home loan protection plans. The premium charges are anywhere between 2 to 5% of the total policy coverage. Under a health policy, the job loss cover gets triggered after the diagnosis of a critical illness or a permanent disability, as such a health condition eventually lead to loss of employment. But the benefit or the income support under the policy are very low. There is a need for a standalone job loss insurance cover. This need is felt much more post the COVID outbreak as it has resulted in business disruption. There are salary cuts, people are sent on leave without pay, and there are also job losses. In a recent letter to the Prime Minister, the Union Minister Anand Adhikari had suggested the need for an insurance product that gives livelihood support for a limited period of time in case of a job loss due to technological advancement or by an act of nature or change in the economic structure. The minister had suggested that the premium for such a policy should be shared by employer, employee, and the government. The global reinsurer present in India had recently proposed a similar product to both the center and the state, covering loss of income during unforeseen events like a pandemic or an epidemic. So how our global job loss policies are structured? In US, the job loss insurance cover is a joint initiative by the federal government and the individual states. They provide cash benefit to workers who lose job without any fault of their own. The money is contributed by the employer by paying taxes into the unemployment insurance trust fund. There is a weekly cash payment covering half of the salary of the employee. This is paid for a maximum period of 26 weeks or up to a 6 months period. This benefit is not available if one quit the job or are self-employed or fired from the company for a valid reason. So how should India structure its job loss cover? It is not possible for any general insurance company in India to come out with a comprehensive job loss insurance cover because of the possibility of high insurance claims. The pool approach or creating an insurance pool or fund can be followed to make a beginning. The trigger for policy payment should be some massive business disruption because of a pandemic, epidemic, financial crisis, industry or sector sickness because of technological changes or big disaster like an earthquake or a flood. The government has to come forward like it did in the case of a crop loan for farmers or a medical insurance for poor families where center contributes almost half the premium and the remaining is shared by the states as well as the insured person. The US-style central government and state government initiative should be encouraged to ask employer to contribute to such a scheme. The employees can also be encouraged to participate in such a scheme by paying a small premium. The insurance companies can also cut different insurance policies, say a product or compensation for salary cuts or sudden event of leave without pay for a short period. These products will definitely reduce the risk of an insurer. While job losses impact the immediate families and children emotionally and mentally, there are bigger issues of making a livelihood, securing the financial security, and avoiding a bankruptcy-like situation. There are also consequences for economy in terms of saving, consumption, and investment. A job loss cover will certainly provide a short-term respite to an individual as well as to the economy.